back to MMGinvest. First of all, this is not financial advice. This is just my opinion. I could be wrong. And do not invest in anything you're not willing to lose or lose sleep over. Trading stocks, equities, anything is extremely volatile, extremely risky. And once this video is uploaded, it's pretty much obsolete, and this is more of an educational channel. Alright, so I'm going to just talk for a minute. Let's talk about the meeting, FOMC meeting yesterday. So, here's my opinion. I don't think Jerome Powell did a good job convincing the markets that everything's going to be okay. If anything, the markets are the tail's wagging the dog, basically. The stock market is in control of the Fed. And I think once investors fully realize that the Fed can't raise interest rates ever again, unless they do, and then it just blows up the economy. If they don't, then we'll get hyperinflation eventually, and it'll blow up the economy anyways, but it'll buy a little more time. And my argument is they're gonna sacrifice the dollar because it's gonna buy more time. It's politically the easiest thing to do. So pretty much, I think the canary in the coal mine just died. Meaning, if you know why they had canaries in coal mines, is if there's a gas leak from beneath the earth, the miners will suffocate and die. And that's why they used to bring canaries into the coal mines, because the canary alerts everyone first and flies away or dies. So I think the market is starting to price in a recession. I know the bond market is, because look, that's why the yield curve inverts. It's because the bond market prices in a coming recession, or this time around it's going to be a hyperinflationary depression, like collapse. So the smaller interest rates, the 1 month, 3 month, it's higher than the 7-year. So that's the beginning of an inverted yield curve. I don't know how fast this is going to play out, but it could happen quickly. Because not too long ago we already had a recession, and the yield curve has pretty much predicted the last 7. So markets are forward looking. They like to predict the future, right? So more than likely, the market's going to react much quicker this time around to an inverted yield curve. You know, sometimes then the yield curve inverts, and then 6 months later we get the recession. This time around, it could invert in next week. I don't know. We'll see. I'm not a prophet. So the yield curve, that's a huge red flag. Jerome Powell yesterday, I mean, he looked nervous. He was nervous. He wasn't answering questions quite as well as usual. And I think it's making the markets nervous. Not just that. We just had a rally, the largest rally ever from the previous correction, right? This is a huge rally. Never seen a rally like this before. Look at this. Now, going to the weekly chart here, it was a 9-week rally. No, it was longer. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. About 13 weeks of upside. And also my TD indicator is giving me a perfected 13, which is also signaling a pullback or a correction from this rally. Alright, so like I said in previous videos, this is going to be possibly the largest bull trap ever. And I think that's exactly what it's going to be. Now, later on, let's say this does turn into the largest bull trap. And disclaimer, I am shorting the market, right? I have inverse ETFs. I also have gold and silver mining stocks. I'll talk about gold and silver in a second. I'll talk about the dollar. Dollar sold off as well. So we get a huge pullback, right? Back maybe down to this major support area. And the price will be very volatile. It'll fluctuate. And then the market, it could take off and go past previous all-time highs. But my theory is the only reason it will do that is because the Fed is cutting interest rates. So, the market could be doing all-time highs, but my mining stocks and gold and silver are going to the freaking moon. And let's take a look at gold. Gold went back above 1,300 again. And like I've said, guys, I've been dollar cost averaging in. I'm just buying more and more mining stocks. And this is going to be the largest wealth transfer in human history. Literally from the stock market to gold and silver mining stocks. If you're not holding mining stocks, you're crazy. You're going to miss out on the largest wealth transfer. Now, that brings me to my next topic. I mean, in the comment sections, there's some people who are like, oh, don't hold mining stocks, just buy the physical. If you're buying the physical, right, which I hold a lot of physical myself, the problem with that is it's just an insurance policy. You're not going to get rich off of holding physical gold and silver. I mean, you might make some money, but you're not going to get rich off of it. And I'm going to, listen to me. You buy right now, today, at today's price, at $1,315. You buy 10 ounces of gold bullion, right? You buy 10 ounces, 10 coins. And that's going to cost you about $1,400, maybe a little more, or not $14,000, maybe $14,500, because there's a premium on physical. And then, there's delivery charge as well on top of it. So you're going to spend around $14,000, $14,500, maybe $15,000 on 10 ounces of gold. Now, in the next 5 years, let's say the best thing that happens, right? 1 ounce of gold goes to $10,000 an ounce. So now you have $100,000 5 years from now in value of your 10 coins that you bought today. So today you spent about $14,000. 5 years from now, it's worth $100,000 if gold goes to $10,000. You can do the same with silver, right? So it's $100,000 worth in the future. The problem with that is the dollar will probably be worth about 75% less. So in reality, it's only going to be worth, in today's money, $25,000. So technically, you didn't even double the value. And not just that, more than likely, what's going to happen is you're going to be forced to sell your gold and silver as the price is going up, because you're not going to be able to pay for rent or for your mortgage, your car payments, food, gas, health issues, whatever. Your standard of living today is going to dramatically drop. The only way you're going to be able to maintain your current standard of living is if you're selling off your precious metals. And then in the end, by the time you hit hyperinflation in the US, you're going to run out of your metals. The other argument is stocks are too risky, because the banks and the brokerage accounts will go under. If the banks and the brokerage accounts go under, no one's going to buy your gold and silver because the only thing you're going to need is land to farm and guns and ammo. And I'm being honest. No one's going to give a shit about your silver and gold if the banks all of them go completely under and the brokerage accounts go under, because what that means is the supply chain, the food delivery, it's going to break down completely. The stores won't have food. And yeah, I mean, the best thing at that point will be weapons and possibly some farmland, like really, really out in the country. I'm not talking like 30 miles, even 100 miles away from the cities, because those farmlands will get raided. I'm talking about like really out there, like in the hills. So I don't think the brokerage, well, I don't know, the brokerage accounts are more at risk than the banks. But I think what's going to happen is the banks are buying metals themselves. Like JP Morgan has the most physical holding of silver in the world. The banks will survive. They'll be zombie banks. And the brokerage accounts will also be somehow bailed out. And in the end, the U.S. will just default on most of its debt and then go to a gold standard because the central banks have been buying gold and silver. So that's what's going to happen. So I am going to buy more mining stocks than actually holding physical, because I think that's going to be the ultimate wealth transfer, and I could quickly and easily sell the mining stocks to go buy groceries and whatnot, or whatever I need to live, right? And that brings me into plugging myself, right? Go to MMGinvest.com and buy my research report. Now, the price, it's going to go up. And I could keep raising the price. I'm going to raise the price probably $1,000 in the end. Why? Because I can. Because, like I just said, the same reason why I could raise the price is because of what I just said to you. You're going to have to buy mining stocks if you want to like survive, in my opinion. That's my opinion. That's my theory. And yeah, I mean, you got to diversify. You're going to be looking at 1,000% gains and more, and it's probably the only way you're going to be able to like comfortably live through the next collapse. So let's get back to the markets. I mean, gold, I was hoping it would go down to 1270. Didn't quite make it there. Bounced off at 1280. I missed it by $10. That dip buying opportunity. But it doesn't matter. I've been buying the dips. In the private members for MMGinvest, I'll post some ETFs that you could trade for gold and silver. Although on the weekly chart, it does look like the MACD is going to cross to the downside. So gold, you know, it might not take off in the next coming weeks. It might bounce around like 1335, 30, and 1300. But once the MACD resets, I mean, it could just take off pretty quickly. And then the mining stocks will start really taking off soon. Because like I said, I mean, the Fed, it really blows my mind how stupid the average retail investor is, and how Wall Street hasn't realized that the Fed is screwed, and the Ponzi scheme, it's coming to its last dominoes, okay? To keep the markets up, to keep the economy going, to get Trump reelected, for all of this to keep going, they have to print more money. Lowering interest rates isn't going to be enough, because they only raised it to 2.5%. That's nothing. Normal interest rates is like around 8%. They could only cut interest rates 9 times because they raised them 9 times, and the smallest percentage point humanly possible, quarter basis point. So they're gonna, let's say, start lowering interest rates probably later this year, and they'll do it 9 times. It could buy maybe another year, but I don't know. Like a black swan event could happen, anything could happen, and they're gonna have to go straight to zero, and then QE is gonna be back on the table. Once QE is back on the table, gold's gonna be past $2,000 an ounce, and my mining stocks are gonna be like in the stratosphere. So that's what I'm thinking. Let's take a look at the dollar. Here's the dollar weekly chart. It last 2 weeks it's been tanking. So it's on support now. Now, if the dollar could break below 95.7, then it's definitely gonna start scaring some forex traders. But once the dollar breaks below its 200-week moving average of 94, then things are really going to accelerate for the gold and silver mining stocks. Now, here's the thing, though. The euro is going to tank even worse. And that will artificially make the dollar look like it's holding its value. But you have to remember, the dollar on this chart that I'm showing you, the index, it's weighted against other fiat currencies, which are also devaluing. So what you really have to do is take the dollar and you put it against a gold chart. Or you weight it against the CPI, or really just commodities like oil and food. Here's the problem. The thing what they're doing with oil right now is the oil is pretty much attached to the stock market right now. Stock market goes up, oil's going to go up. Stock market goes down, oil's going to go down. And I think it's because there's a lot more reserves out there than people think, and the government, they manipulate oil prices. And the U.S. right now is actually turning into a huge exporter. So they're going to talk to OPEC and play the game. We need to keep oil down, because keeping oil down is like a stimulus for the economy. And it's a huge stimulus, right? Because people have more extra dollars, discretionary dollars to spend to buy things and pay bills. So I think if the stock market keeps falling, they're going to artificially push oil down just to keep the economy, just to keep the masses from realizing how bad things really are, and just to buy more time. So that's my thoughts on that. So that's pretty much it for now. I still think there's a decent correction coming on the stock market here, on the S&P and the Dow. Someone said, well, no, I saw an article. There's a head and shoulders on the Dow. Not yet. It's way far from that. So for this week, if this week ends down anywhere around 2,800 on the S&P 500, then this candle is going to turn into an inverse hammer, and that should signal a nice pullback on the S&P 500, looking at the weekly chart, right? And we also had a 9 sell last week. Sometimes, you'll get that 9 sell, and then the next week, the next candle is when it really starts selling off. Let's go to a daily chart. On the daily chart, we're on an 8 count on the S&P 500. So starting tomorrow, before the weekend, the S&P could start selling off. And I expect that, especially after the last FOMC meeting. Here's the thing. Also, Trump and the trade deal. Trump yesterday announced that there's no deal yet. It's going to take longer, blah, blah, blah. I mean, everything's ran its course, to be honest. And the liquidity has to be drying up. Now, I do get one of the guys in the private members, he gives me some, not insider stuff, but like good information from one of the biggest banks out there. And a lot of capital flight has been going into the US equities from abroad, basically China and Europe, because their markets look even, I mean, their markets are in recession. So, like I said, the US is the last domino to fall, so it's going to take advantage of that, and a lot of capital flights going into the US markets for now, which is artificially keeping things up. But here's the thing, because the Fed's been raising interest rates since December of 2016, the liquidity is drying up. There's no more money for the money to flow into the markets. So yes, them stopping interest rates, and they've stopped unwinding the balance sheet as well. So that's going to help not suck more liquidity out of the market. But eventually they're going to have to start lowering interest rates and ramping up QE for the market to keep going higher and higher. Because where's the money going to come from? Where's it going to come from? The people aren't putting... Loans are drying up as well. I mean, the U.S. consumer right now is tapped out. Tapped out. They cannot take on more debt. It is inhumanly possible for them to take on more debt. Who's going to make all the loans? Who's going to take out loans? For there's more money creation through fractional reserve lending to be created, and then for it to flood into the stock market. It's just a Ponzi scheme. It's literally... The last thing Bernie Madoff said before he went off to prison was the biggest Ponzi scheme is the dollar. All right? So, my thoughts, my opinions... Links below this video for the free chat groups where I keep you guys updated on charts and my opinions. And here's the MMG Elite Alerts room. The only way you're going to get in that is if you buy the report. And it's special invitation. Then we have the newsroom, WolfPack Cryptos. Once I get a few more people in the MMGinvest free chat room, I will create a newsroom for that as well. Here's the MMG free chat room. So, yeah. Come on over. Talk about opportunities and everything. And it's time to start taking this seriously because things could change very quickly. I believe by the end of 2019... we're going to see some massive gains in the portfolio, and things are going to start getting real crazy. And by 2020, inflation's going to be running high. You're going to feel it. The average day person by 2020 sometime is going to be feeling some massive inflation. All right, guys. Smash that like. Please share my videos. It's the only way my channel grows and I keep doing this. And leave in the comment sections your thoughts and opinions. I'll answer them. And until next time.